Gold stayed bullish for the day and has achieved 1991 as we discussed in our Asia and Europe session update that once it stays above 1987-88 probably we are looking forward to 1991-92 zone, that is the first resistance. Likewise crude oil too has shown modest bullishness, it has gone closer to 82 levels and since then have retraced. So now what to expect from gold and crude oil, which position you should take trading gold and crude oil, we will see with the help of charts and indicators. This is the second update for the day. Those who watched the first update must have profited. Thus, if you're not subscribed to the channel, subscribe the channel and get the latest updates. Also press the bell icon or join my free Telegram channel to get the live updates. Let's start first to look into gold followed with oil. Watch till the see gold on the early charts. If you look at lower highs, lower lows, it has breached this channel. It is trying to come out of this channel. The probability of a double top here at 95 level exists. Once it stays above 1991, we can stay long for 95 and then the next resistance zone is at 98 2002, beyond which it should be considered bullish. Remember it has yielded double top levels here and since then have traded bearish. If you look at the formation, if it divide into two half, you will find symmetry here, then symmetry here. Now it is trying to look upwards, so I will wait for it to break beyond 1991, which is definitely a greater resistance. Also if you look at the support here at 1983.5 1984 levels, very strong. If you see it is staying below 1984 1983.5 levels, you can stay short here. Expect 1978 1975 and below that a further crash can be expected. Stochastic rising back to overbought zone. MACD is divergent bullish, RSI is looking upwards. Likewise on the 2 hour charts, likewise forming the base here, second green candle, and yes it has formed a very strong support here at 1983.5 levels, only below which we should treat this as bearish. Else you can see rise, consolidation, rise again. The next candle, if it stays above 91, stay long for 95 and beyond that certainly more bulls will be seen. Stochastic near to overbought zone. MACD has crossed over at bottom, trying to trade with divergence, trying to stay bullish, looking upwards. RSI is bullish too. On the 3 hour, similar is the observation on the 3 hour charts. The drop, the retracement, but still more or less staying within the bearish zone. I'll wait. See 1991 certainly good resistance and then 1995 level. These two should be breached in order to confirm the rise here. Yes, beyond that a stronger bullish candle can be expected here. Stochastic overbought. MACD has crossed over, trying to trade with divergence. First greener candle, follow up greener candles can be seen, which may take the prices further high. RSI rising, signs of bullishness. Coming to 4 hour. Now similar is the observation of the 4 hour charts. Couple of consolidation candles, one bullish candle, and yes this candle also still willing to trading with a modest bullish bias. Yes, only selling entry below 83.5 and then 77-78 zone. These are the two support zones below which you should treat this as bearish. Stochastic rising. MACD is on the verge of a crossover. This is a bullish cross. RSI rising as well. Coming to the daily. Now on the daily charts, remember it was trading with the lower highs, lower lows. It has already come out of this channel, suggests that it can possibly reverse, and if it does, more bullish momentum can be seen. First you should wait for the double top levels to be breached, that is at 1995, and then beyond that we can expect higher lows, higher highs as well. We can expect a swing here. On the downside 77-78 and on the upside 98 levels should be greater resistance. Now also one must remember, see these two candles, higher highs are seen here, and even if it tries to retrace or rise, 98 2002 levels are going to remain a greater resistance. Also one must look at on the downside, the 20 period moving average is still sitting far below at 1960, which is a greater support. Stochastic has dropped. MACD is on the verge of a bearish cross. It is still on the greener side. RSI is overbought. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy. But before we proceed, if you want to learn this art of trading, you can join my mentorship batch. 27 batch is going to start on 28th of November. Limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my signals channel where trading as per the signals you can benefit. And yes, you can register by visiting my platform forexonda.com, where we are going to conduct this mentorship batch. Also, the next webinar session, first webinar session for the series is going to come on Sunday, where we are going to discuss the market movements and predictions for the coming week, where we are going to take up your questions and queries regarding to the price action for each and every instrument which you are looking forward to. So do join the webinar as well. Just visit the platform www.forex1. The links are there in the channel and video description. Now, looking at this, I will recommend you to buy gold today at 1991. Now, 1991 is a greater resistance beyond which you can expect it to hit 1995, the double top levels. And if it stays above 1995, the most important zone is at 98 2002. Remember, this is the zone where it is going to get maximum resistance. Achieving those levels also, we can expect a possible reversal. Yes, reversal is possible. On the downside, you can, and thus you have to trade with caution, trade with a trailing stop loss. On the downside, a selling entry can be taken at 83.5. Below 83.5, we can look forward to 77 78 zone as the first target, 74 75 as the next. And remember, higher lows, thus you have to wait for it to break below 70 in order to confirm the bearish reversal. Take your trades accordingly. Below 1970, this time we are going to directly look at 1960 levels. Trade accordingly. Now let's have a look at crude oil. See, what US crude is doing is, first of all, the flat top at 83, 83.3. I've always mentioned that this is a greater resistance. After that, the drop, and this is a retracement. Now remember, it is trying to create a channel of its own. This is a bearish channel which it might try to create. 82 now is a greater resistance. Beyond 82 is where further bullishness can be seen. But 82.4, 82.8 and 83 levels are greater resistance. In between 82 and 83, we have seen it consolidating here. Thus only buying entries above 82. Also, if you look at, see, right now it is trading in this bullish channel. Once it breaks below this channel at around 81.2, or rather I will say 81 levels, that is a level below which you can sell. Expect 80.5, and below that we may see it breaking below 80 as well. Yes, lower lows can be seen. Now look, stochastic is comfortable. MACD is trading with divergence, bullishness, looking upwards. RSI is staying bullish too. Coming to 2-hour chart. Now look at 2-hour charts here. Higher lows, higher highs, rise, consolidation, bullishness here. 82, greater resistance, beyond which, see, 82, it can try to at par with this zone here, 82, 82.1. If it stays above, we can look forward to, this is the resistance zone at 84, 2.4, 82.5, which is going to prove out to be a greater hurdle for oil for today. If it stays beyond 82.4, 82.5, then only you should treat this as bullish. Stochastic rising, MACD is, yes, divergent and bullish, looking upwards. RSI is rising as well. On the 3-hour charts, if you look at, similar observation here, higher lows, higher highs, and see, the prices were divergent from 20 period. It has achieved 20 period and now getting the resistance around the same levels. Also, if you look at, this is an indecision candle, doji candle. Next candle staying above this zone can take it further highs, and we may see a rise towards 82.8, 83 levels here as well. This is also probable because, see, two lows, lower highs are done, and if you try to see the lower lows, so possibly we may see it achieving below or going close to 83 or 82.5 zone. Stochastic is rising, MACD is divergent and bullish, RSI is rising as well. Coming to 4-hour charts. Now on the 4-hour charts, likewise, higher lows, higher highs, price is willing to achieve 82. Once it stays beyond 82, certainly more bullish momentum. Yes, it has achieved the 20 period moving average, and at the same time, one must note, any break below this zone here, first of all, you can take a sell entry at 81.3 levels, 81.2 levels here, below which you can expect 80.8, and then below that we may see a massive bearish reversal. So be cautious for 82 levels, only above which you can say that the bulls are back. The stochastic rise, MACD crossing over here for a buy, and this crossover is coming at a lower levels. You can see this. RSI is rising as well, suggestive of bullishness. Coming to the daily. Now see, on the daily charts, previous candle was a greener candle with a smaller body, and yes, it has got a massive wick on the upside, suggestive that the prices failed to stay bullish. Yes, it has also given lower lows. Lower lows suggest that if this time it stays below 81, 81.8 levels, we can say 81, 80.8 levels, we can say we are looking forward to $80 and below. Thus, a selling entry at 81.2 can be taken, but this is going to be a cautious entry. Only below 80.8 is where the bears will be taking over, and then we can look forward to 80.5 and $80 levels. Below 80, certainly more bearishness is going to prevail here. On the upside, a buying entry is only above 82, beyond which you can say, see, I do not see it breaking beyond 83.3, but these are markets, anything is possible. Thus, beyond 82, you can stay long and bullish momentum can be seen there. See, stochastic is oversold, MACD is divergent and bearish, RSI is flat. So looking at this, buy at 82 levels, sell at 81.2 levels here. Below 81.2, wait for it to break below 80.8, only below which you should expect it to trade bearish for 80.5 and 80. and you have to trade with caution there. You have to put a strict stop loss as long as 80.5 is not breached. You have to put a trailing stop loss or keep the stop loss at your entry price. Take your trades accordingly. Trade with a stop loss and a trailing stop loss. Like, share, subscribe, and comment. Join my mentorship batch or signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. See you again tomorrow with the Asia and Europe session update. Thank you.